Okay, today I titled this podcast, How to Get Rich as a Doctor. So let's talk for a few minutes about that. The first thing is to avoid getting poor. Okay, what does that mean? Well, initially in the medical pipeline, the first thing most people do is get poor, right? They take on a whole bunch of debt to pay for medical school or dental school or whatever. So minimize how much of that you take out. Minimize the cost of your education, take advantage of other resources, apply for scholarships, go to the cheapest school you can get into, etc. And in particular, make sure you match. If you're a physician doing well enough in medical school and assessing what you really are able to do and making sure you match is critical. Not matching can be a financial catastrophe. I mean, a lot of people just have to apply twice. No big deal. You only lose a year of earnings. But far too many these days, particularly those coming out of Caribbean medical schools, are not matching at all after 2, 3, 4 tries. And they're left with a physician level of debt and no physician job, no physician level income. And that's a real catastrophe. So make sure you get through your training. The doctor income is what's going to fuel your wealth creation. Even if you end up with a great side gig or you become a real estate mogul, the doctor income is going to kick that off. It's the cash cow. So make sure that you get it. You also want to make sure that you get a good job that you can do for a long time. Career longevity actually matters more than your paycheck. You want something you're going to enjoy doing. Far better to spend 30 years as a pediatrician than 5 years as an orthopedic surgeon. Make sure you get your contract evaluated. Make sure you're being paid fairly. I'm always amazed when I run into people that say they're being paid at the 10th or 20th percentile for their specialty. Why? Are there no jobs that would pay at the 40th or 50th percentile that you would be happy doing? I find that hard to imagine. So either pass on those jobs or try to negotiate a higher pay rate. Far too many of us are getting paid less than we really should be. Another way to make sure you avoid getting poor is to be adequately insured. For most docs, that means disability insurance primarily. Disability insurance protects that cash cow you have, that thing you invested a decade of your life to get, this ability to turn your time into a high income. You need to protect that. If you don't have disability insurance, go by the white coat investor, click on recommended insurance agents, and call one of those agents up. This is really important. You need disability insurance. Likewise, you need health insurance. Illnesses and injuries happen to docs too, and they can really do a number on your finances. Property insurance, fire insurance on your home and anything particularly expensive should be insured. If you can't afford to just replace it with cash, you probably ought to have insurance on it. Liability insurance matters as well. Not only professional liability insurance or your malpractice coverage, but also a personal liability policy. Those are usually embedded into your auto policies and your homeowners policies, but you also need to stack a personal liability policy or an umbrella policy on top of those policies. The limits on that should be similar to your malpractice insurance, 1 million, 2 million, 3 million, 5 million, that sort of a limit. The good news is an umbrella policy is very cheap compared to a malpractice policy. I think I pay about now I'm part-time, so I think I'm paying about $10,000 a year in malpractice insurance. And for $200,000 or $300,000 a year, I have twice as much personal liability insurance. It just isn't very expensive. So I go out and get an umbrella insurance policy today from the same company probably that offers you either your homeowners or your auto or both. You also, if somebody else is dependent on your income, need to get some term life insurance. Again, this is cheap insurance. It doesn't cost much to get term life insurance. And so get that in place if somebody else is dependent on you. Okay, now you're kind of done playing defense a little bit. It's time to play a little bit of offense in becoming rich as a doctor. Make sure you take advantage of your live like a resident period. This is the period lasting 2 to 5 years after you come out of training. And no matter what your financial situation, you ought to have this period in your life. If your financial situation is bad, you've got low income and relatively high debt, this is the way you clean up that debt. If you live in a high cost of living area, this is how you get into a house in that area. If you don't have loans and you live in a low cost of living area, this is how you build wealth and hit early financial independence. But everyone should do it. Take advantage of that fact that you are used to living on much less. What do I mean when I say live like a resident? Well, a resident's making something like 50 grand a year. And if you can go and start making an attending income of 200 or 250 or $300,000, there's a big difference between 50 grand and $300,000, even with the increased tax burden. If you can just hold your lifestyle somewhere close to that $50,000 a year for a few years, you'll be surprised what you can do with that wealth. You can use the difference to pay off your student loans, to save up a down payment on your dream home, to catch up to your college roommates in retirement savings. And you can do that. but you've got to have the discipline to not have a lifestyle explosion as soon as you come out of training. After that 2 to 5 year period of intense wealth building, it's okay to dial it back a little bit and loosen the purse strings. Make sure you're still putting 20% of your gross income toward retirement, plus enough to meet any other financial goals you may have, like college savings, for instance. But remember that your income and savings rate matter far more than your investment return at that stage. It really is all about how much money you're putting into the portfolio. Of course, make sure you have some sort of reasonable investment plan. There is no perfect plan. You just need a good one. Most of your money at this stage of your life should be invested in riskier assets like stocks and real estate. Some of your money should probably also be invested in safer assets like bonds. Keep your fees and your taxes as low as possible. And then stay the course with this plan through market ups and downs for decades. Take some basic asset protection steps. Okay, this isn't that hard. Max out your retirement accounts, make sure you have malpractice and personal liability insurance, title your property properly. Those are kind of the things that you should do for asset protection. Know your state's asset protection law. It's all state specific. Also, you should probably do some basic estate planning. You need a will. You probably need a revocable trust. Make sure you've named all the correct beneficiaries in all of your insurance accounts and any annuities you may have in your retirement accounts. You can have payable on death designations, even on your taxable and bank accounts. Do those basic estate planning steps as well. This process of becoming rich as a doctor really isn't all that complicated. Don't lose the forest for the trees. Don't get paralysis by analysis. Make sure you're doing something toward it, and you'll be surprised how much better you feel once you have your financial ducks in a row and you know you're on your way to becoming wealthy.